The fact is that almost all businesses will need to borrow money at some point. Whether it is startup funding or money for expansion, startups need to deal with the costs of starting up their business, and businesses that are already running will need financing to grow and scale their business. The good news is that there are many different types of startup funding options available for new and established businesses. However, the kind of financing you choose will depend on your specific business situation. Things like how old your business is, how it's doing, and what market opportunities there are, will all play a role in what type of funding you can get. Some people finance their new businesses with their own money, or by borrowing money from family or friends, but these are not options for everyone. That's why in this video, we'll be focusing on the 5 most common startup funding options, and tell you about the easiest and fastest way to finance your startup business. However, you should know we can help both established businesses, as well as startups trying to get off the ground. So make sure you watch the entire video to discover the best option for your business. But first, please like, comment, share and subscribe to our channel. This helps us to continue to bring you more content to help you with business tips to grow your business. We appreciate your support. Businesses looking for startup capital need to know that raising startup funding is never easy, and usually takes longer than anticipated. Especially if you go the typical routes that most people are familiar with. We'll cover those in a moment. But we'll also tell you about some much easier ways to obtain startup funding, so be sure to stick around for options 4 and 5, coming up in just a few minutes. Let's get started. The first startup option for funding is 1. Crowdfunding. Crowdfunding is a way for startup entrepreneurs to raise money to start their businesses from a variety of contributors, usually from an online crowdfunding platform. It also helps companies promote their products or services. The 4 most common types of crowdfunding campaigns are equity-based, debt-based, reward-based, and donation-based. Equity crowdfunding is when you sell shares or some other interest in your company in order to get startup capital. Debt-based crowdfunding, also known as peer-to-peer lending crowdfunding, is where you pay borrowed money back with some fixed rate of interest. It needs to follow federal and state securities laws very closely, which is why you should not try to do this without help from a lawyer. Rewards-based crowdfunding can be a great way to raise money for your startup business. You do not have to give away part of your company, instead, you just give away some products or services as rewards. Plus, you don't have to worry about making payments back like you would with a small business loan. Each crowdfunding site charges a fee in order to list your campaign. There are 2 types of fees: processing fees and a percentage of funds raised. Some of popular crowdfunding sites include Kickstarter, GoFundMe and Indiegogo to name a few. 2. Angel investors. Angel investors are people who invest in a startup business, or an early-stage company in exchange for an equity share of the company. These investors are betting that the company will do well, and hope to make a significant return on investment. Angel investors typically invest between $25,000 and $100,000 per startup. However, they may invest more depending on the business. There are several things that these investors look at when determining whether or not to invest. First, they want to know that the quality, commitment, passion, and integrity of the founders are exceptional. They expect a clearly well-thought-out business plan with intellectual property or interesting technology. They are also looking for real potential for the company to become huge. In addition, they will expect an appropriate valuation with reasonable terms, and want to see the viability of raising additional rounds of startup funding, if progress is made. The best way to find an angel investor is by getting an introduction from a colleague or friend of an angel investor. You can also use LinkedIn to see if you have any connections to angel investors and reach out. 3. Venture capital. Venture capitalists typically want to invest in startups that have massive potential for growth and that have already shown some success. This could mean that the startup already has a working product, or early customer adoption. This also means you'll need to pitch your startup business to venture capitalists, so you'll need to be well prepared. Therefore, you'll want to make sure that you understand their background. Research the priorities of the venture capitalist and make sure you focus your goals to align with theirs. You'll want to focus on the benefits of your product. Make sure to clearly communicate how your product can help potential customers. You will also need to know your numbers and competitors very well if you want to attract investors. Make sure that your numbers make financial sense and explain what makes you better than the competition. Okay, so the next 2 options are the easiest and fastest ways to get startup funding. There is no need to give up any equity in your business, no pitching your startup idea, and no need for a business plan. So what's the easiest and fastest way for startup funding? 4. Business credit cards. That's right, one of the easiest ways to get startup funding for your new business is through the use of business credit cards. This can be a great option if you have good personal credit of at least 680 and are looking for anywhere from $5,000 to $150,000. In some cases, the score can even be as low as 650. There are a few things to keep in mind when using business credit cards. First, make sure that you get a business credit card that reports to the business credit agencies. This will help you establish business credit. Second, try to find a business credit card with 0% APR for the first year. This will help you save on interest payments. Third, make sure that you make your payments on time. This will help you avoid late fees and potentially damaging your credit score. And finally, 5. Personal term loans. You can get startup funding for your new business quickly and easily through the use of personal term loans. This is a good option if you have good personal credit of at least 680 and can show proof of personal income for the last 2 years. You can apply for up to $150,000 in funding. In fact, by combining business credit cards and personal loans, you can get up to $350,000. Check out the link below for a simple form submission to see what you can qualify for. With personal term loans, you'll typically get a fixed interest rate, fixed monthly payments, and a fixed loan term. The benefit of personal term loans and business credit cards is that they can be used for just about anything. So there you have it, 5 different ways to get startup funding for your new business. Choose the option that best suits your needs and get started today by checking out the link below in the description. Each of these options comes with its own set of benefits and drawbacks, so make sure to do your research before deciding which one is right for you. With just a little effort, you can be on your way to getting the financing you need to start your business off on the right foot. If you need assistance, please call 877-235-0672 or visit firstchoicebusinesscapital.com. Our loan specialists are standing by, and we are happy to help you with the process. Call 877-235-0672 or contact us at firstchoicebusinesscapital.com.